Revenue and funds being received are recorded when earned, or they're in your control, and expenses are recorded when those expenses or liabilities occur. So revenue when earned, expenses occurred for contributions when they're under your control. This is GAAP, main emphasis GAAP. It's the best accepted practice. It's also what I jokingly say part of the Accountants Full Employment Act. As you'll see in about a week, when we go over the balance sheet in detail, it causes a lot of journal entries and it makes for complicated. So, not cash basis is pretty straightforward. Accrual basis is this, but don't get mad at GAAP for doing this. What you're trying to do is come up with a safe system that works for all types of entities, not just nonprofits, for-profits, big, small, nonprofits, governmental entities, everybody. And so in order to do that, you can imagine it has to be pretty complicated, okay? Now, let's go to the next section. The next section is financial reporting. What I want to talk about here for a second, and I'm going to go into the balance sheet in a little more detail in a minute, is financial reporting aren't just financial statements. GAAP, generally accepted accounting principle, financial statements are required statements, require a balance sheet and an income statement, okay? And those are the statements that you see under audit, and we add a cash flow statement in with those for certain organizations. Management reports are something we manage off for every day. When you take an income statement and add a budget on it, it actually becomes a management report. And we're going to talk about budgets a little more. This one and we talked about it earlier. Budgets are there for management purposes. They're not required by GAAP. There's no budgets on the 990. There's no budgets that show up in audits. But would you be associated with an organization that didn't have a budget? Of course not. So budgets are really important. But so when you add a budget to an income statement, it becomes a management report. Deb, I think someone might have had a chat comment. I thought I saw something pop up.
Yeah, but it's Jennifer just saying she had to switch computers. She's back on.
Oh, okay, good. Okay. And then there's lots of other, what I call sundry reports, many different types, a report listing contributions, a report about program registrations, a check register, on and on and on. And these are all important things to keep our pulse from a financial perspective on how the organization is doing and watch over things. But they fall into these three categories: financial statements, GAAP reports, non-GAAP but management reports, and all different types of other sundry reports that help us to monitor and check on things. Okay. Now, I'm going to spend a couple minutes going through the balance sheet, but this is going to be the whole webinar when we get back together in about a week. We're going to do a 60-minute webinar because the health of an organization only shows up on the balance sheet. Yet, as individuals, we get tunnel vision on the income statement and how we're doing the budget and how revenue and expenses and contributions are flowing in and such. Okay. Now remember that a balance sheet's a point in time. So on June 30th, that's where all your assets and liabilities, we're going to look at one in a minute, on that day. But if you're a 12/31 year-end entity, your June 30th balance sheet is still June 30th, but your June 30th income statement will cover 6 months. Is everybody okay on that? I think most people understand how to look at the financial statements. Any questions there, Deb? Is that okay?
No questions yet.
Good. Okay, now a couple things. The balance sheet's divided up into three major sections: assets at the top, just like for-profits, liabilities in the middle, and net assets on the bottom. Again, we're going to go into these in great detail next time and talk about where we have exposure with the COVID-19 crisis and managing forward. We also, balance sheets usually have a minimum of 2 columns, which is comparing the current year to the last year at the same time. And there could be other columns in there, and we'll talk about that next week when we come in. But generally, you'll see 3 sections from the top down: assets, liabilities, net assets. And then you'll see a comparison this year to last year. So you can see if cash is up or down and where things are going. And this is how the formula works. Everybody got it? Well, I think you've heard of this before. You take all your assets, subtract out your liabilities, it equals your net assets. And we'll see this on the balance sheet in a second. The other way you can state this formula mathematically, it still works, is assets equals liabilities plus net assets. I like this explanation because it makes sense to me. Take my assets, remove my liabilities, what's left over, my net assets. But the balance sheet is actually displayed this way. Assets at the top, you get a total. The liabilities and the net assets together equal the assets, and that's how we know the thing's in balance and there's not an error in it. And that's where the name balance sheet came from. Okay, let's take a look at a sample. Deb, is that readable to people? I hate when we put numbers on a PowerPoint, it always gets small. But is it okay?
It looks okay. I'm trying to figure out.
Don't make it any bigger. It'll be fine. We're going to leave it
Okay.
there. And
All
we're going
right.
to do more detailed examples next week that we're going to pass out in separate handouts. Okay?
Perfect.
Can everybody see that the assets are at the top, what we own? Everybody got that? Liabilities in the middle, what we owe, equals net assets. So take this 2.281 million, subtract out 622,000. What's left over is 1,658,000. And notice how the top and bottom are in balance. Can everybody see that? But you see liabilities, and so you can see how the two formulas work. It's this minus this equals that, or this plus this, and the two numbers are in balance. Any quick questions? Everybody good? Anything popping up, Deb? Okay.
Nope.
Now, I'm going to put you, we're going to do this mostly next week, but I would like to take a minute here, Deb. Anything jump off the page? Any observations? I'm just curious to see how you look at this. And then I'm going to tell you how I look at it. There could be some good things and some bad things. I just want to see. Remember, and this is not a comparison, it's just a single year. And this, you don't know who this organization is. Does something jump off to the page? Do they look healthy? Do they look in trouble? There's millions of dollars in assets there. What do you think? So Deb, is anybody making any comments? I'd like to see what.
No, but let's give them a moment and
Yeah, take a look at it.
and everybody do feel free to unmute yourselves or put it in chat box or text me. We really want this to be interactive.
Now we're going to put Deb on the spot here in a couple of minutes. Okay. Well, not yet. Don't say anything yet. We're going to ask you one or two questions because I know you get to look at a lot of balance sheets because you're working with lots of different organizations. And it's one of them. It's not a standalone question, but it's one of questions that you want to know who you're partnering or talking to or funding, right?
Right.
There's a lot of times it makes sense to look at them, right? They're not the end all, but you can't ignore them either. Okay, any comments?
Nope.
Okay.
So I'll take a crack at it.
Yeah, and Deb, what I'd like you to do is I want to ask you two questions. And
Okay.
everybody watch the way Deb answers this and not to put you on the spot.
And if I get it wrong, then just feel
No,
free.
there's no wrong answers. When you see this, what pops off the page at you? What hits you first? And then I'm going to ask you a second question. And do you think it's a healthy organization overall or not? What pops off the page and makes you think it's healthy or not healthy?
So it has a lot of assets and the total liabilities and assets looks really strong. But when I look at the money they have on hand, the cash savings and the operating cash, that's actually less than their total liabilities, and that worries me.
Yeah, so you made some really good comments. Okay, so I'm just going to expand on this because I'm watching the time, okay? So I call it my 60-second test when I look at a balance sheet. The very first thing I do is I look to make sure the two numbers are in balance so there isn't a mistake in there. Okay, in this case they are. The second place is I go to the net assets section because if they were to close their doors, they would have $1.6 million left over. But Deb, that's a nice number, right? 1.6 million in net assets. But why am I upset about their net assets? Why am I not happy?
Well, $1 million of it is permanently restricted net assets.
Up there, yeah. So, and we're going to talk about restrictions here in a little bit, but that's money they can't spend. They're holding that in perpetuity for a scholarship or something. So now they're down to 658,000. Why am I still upset about their net assets? 658,000 is a lot of money. Why am I still upset?
Well, their liabilities
No, just
are
in the net asset section. Why am I still not
just
happy?
in the net asset section.
They have
Well,
600 left over. Why am I not happy?
well, because the vast majority of that is temporarily restricted and I
Yeah,
can only
yeah,
spend it on certain things.
yeah. And operating reserves can only come out of unrestricted. So if they had to shut their door down and that money was committed to a certain grant or something, that funds would have to be returned or they wouldn't be able to spend against it or whatever. You know what I mean? The idea, if they had 500,000 unrestricted and only 170,000 of restricted, we would feel totally differently. So I always look here first. The unrestricted is the really key. This is a really low number for this size organization. And just so you know, the entity sitting behind this is about a 2 million size entity. So they're really sitting on not much. And then I do what Deb does. I always go to see what's in their checking account and what's in accounts payable and accrued expenses. And you can see they're falling behind there. And we're going to talk about other lines and such, but it's a quick indicator whether they can pay their bills or not. You know what I mean? And just remember, we're going to talk about this next week. There's one thing that's not in accounts payable that we pay every 2 weeks. And what is that, Deb? What's that? We pay
It,
every
it is payroll.
payroll, right? So even if it looks like we have enough money to make here, remember payroll is always the biggest thing. It comes without breaks, right? Every 2 weeks, there's no breaks, and so that's there. So we're going to explore this more in a bit, but this is a good segue into unrestricted, restricted. This is something that's really critical to today's discussion. Okay. Unrestricted is the key. The health of an organization shows up here. These are assets that we've gotten in through exchange transactions. Okay, so if you did charge the registration to come to an event and you charge $100 and you cost you 50, you have $50 left over, that's unrestricted money, from those type of exchange transactions, memberships, registrations, fee for services, all that. Any funds that are left over are unrestricted. And it also can come from gifts from donors that didn't restrict their gifts or they were silent. Okay, if a donor is silent, then the money's unrestricted. Okay. So this is where unrestricted net assets, we're going to tie this into operating reserves next week. Okay, where we have to keep, and then what makes the audits and accounting for nonprofits difficult is accounting around the restrictions. Okay, because there's a lot of paperwork that for-profits don't really have to worry about. There's 2 types of restrictions. There's purpose restrictions. I'm going to give you money. I'm going to use a very boring example. Let's pretend like you have a library, okay? Deb, for the next 10 minutes, you have a library, okay?
Okay.
Okay, could I donate for you to buy only books for the library? Yes.
Yes.
And you would say, and that money could only be used for books, not for education programs, not for anything, just to buy books. Could I donate to the library for you to only buy children's books? And you could say, yeah, you have the children's section. So I couldn't use it to buy other books. Okay, that's a purpose restriction. You also can have a time restriction. I can make a donation, and you see this oftentimes with pledges. Well, I'm going to pledge $1,000, but I'm going to really, instead of giving you $1,000, I'm going to make a $200 5-year pledge. For 5 years, $200 a year, $1,000. So there's inherent time restrictions. Or I could limit my gift. Here's a $10,000, but I only want you to spread out the use of it over 5 years, $2,000 a year or something. And you can have both, which is the definition of a grant. Because most grants are for a certain purpose, right, Deb? And very few grants are open-ended. They usually have time start-end periods, right?
Right. In fact, right now we're seeing some very short-term ones where they want it spent in the next month or 2 because of the pandemic.
Right. Now, Deb, should you have a gift acceptance policy? Yes or no?
Yes.
Yes. Will you always have one? Yeah, and it's hard. Let's go back to, so I want to give you children's books. You said yes. I want to give you children's books that are only in Icelandic language. Would you still say yes?
Might depend if I had an audience for it.
Yeah, but see what I'm saying? At some point, without a gift acceptance policy, there might be a gift you turn down, because it doesn't work. And we see that. It's heart-wrenching. But some gifts can cost organizations more than they're worth. And for example, we have turned down more than a few grants where a grant will come in and it says that you can use none of the funds for overhead. You know, now if it's a $5,000 grant, we can eat the overhead on $5,000. But if you're a $1 million organization and someone wants to give you $500,000 and you use none of it against overhead, it could really materially hurt the organization, set a bad precedent, right?
Right.
And all those.
Another example might be you have a library and they want to put conditions on how you maintain them, and you would have to invest all of this money in special air conditioning and whatnot. It might cost you more than it was worth.
Yeah, or you have an obnoxious board member who wants to donate $500,000, but they want you to use the money only to build a building so they can put their name on it. And you don't need much office space. You're okay with leases and things and whatever. And it's just something you don't want to go in and manage and have to sublease and all these, they're just not every gift works every way. We try to work with the donor, obviously, and all that stuff. Okay, can we go to the bottom of the page here? Really important. Take your eyes down here.
Yeah.
Not only do these exist, but we have these two distinctions, temporary restricted and permanently restricted. Remember, we saw that back here on the example down here. Okay. So anybody want to take a shot at what's a temporary restricted gift or a permanently restricted gift? Anybody before I just spew?
If you want to text me, if it's 202-213-8981. 202-213-8981 if you're on the phone or something and can't, don't have access to a microphone and can't use the chat for some
No
reason.
worries. Trying to make it a little interactive.
Yeah, and people are chatting, but they're doing it. Yeah.
Okay. Let's go to the permanently restricted. Probably not too much, Deb. I never asked you this question. The couple of 990s I've seen so far haven't had these assets, but these are funds that someone gives to you that the funds are not spendable.
Right.
They're to be held in perpetuity, to be placed in an earning-based account, some sort of investment, certificate deposit or something, that the funds thrown off of that could continue to support an effort going out in perpetuity. The classic example of, let's say you want to give a $5,000 scholarship in Deb's name to someone, okay? You would ask, Deb's family to donate between $100,000 and $120,000 so that we could take that money, invest it, and it will throw off at least 5% a year, maybe a little more, a little less, and we have some money for administration, because you have to go through all these scholarships. Here's an example where we turned down more gifts than a lot, because someone wants to give us a $10,000 permanent restricted gift, and in the end of the day, it's going to be more work, because that $10,000 gift is going to throw off $50 a year, $500 a year, and it's just not going to affect, you know what I mean? So
we have several members who have endowments, and it's important to know if the board has the authority to pull money from the endowment in times like this. They may, in fact, not be permanently restricted in the matter Mike is talking about. And so if you are financially struggling, it's a good idea to look sooner rather than later at any endowed funds to see if you would need to go to the donor or go to court, or whether the board has the authority to pull money out of the principal.
Yeah, and we're going to talk about that on the next slide. Temporary restricted there's a hard restriction like buying books, but they're spendable funds. So if I gave you $10,000 to buy books, you just have to over some time period, if I'm silent to the time, over some time period, eventually spend the money only on books. Otherwise it sits on your balance sheet. Okay. So this is spendable. This is not spendable. You're only spending the earnings. Now let's go over here and look at these two categories and where some things that are coming in here and how they work and some issues. Okay, temporary restricted gifts are spendable for a specific purpose. We went through sort of the library, scholarships, library type of explanation. Okay. Permanently restricted, not spendable, funds held in perpetuity, usually for a specific purpose. We see these museums, schools, they'll build a building, but they'll get an endowment to maintain the maintenance on the building, maintain the artwork that was donated, maintain the memorial, and all those kinds of things. And these can work. It's tough at small dollar amounts. Now, Deb, I need your help here. You ready?
Mm-hmm.
I want to make a statement first. Only donors can restrict funds, or the sources the funders can restrict funds. Boards cannot restrict funds, okay? Only donors, outside sources can get money into these two. As Deb was referring to, we will see on a lot of financial statements, there's endowed funds that the board has sort of put in there. It's coming out of unrestricted from many years ago, or they assume the donor wanted them to go there, but it's not. And if we can go, those are considered what we would call a quasi-endowed fund, quasi-endowment, and they might be spendable. So you just have to look to see, did the board slough it into there or not, okay? And the other thing is boards can set aside funds for a future use. And oftentimes it can be a good strategy, but that would be a designation in the unrestricted section. And the reason it still stays in unrestricted, because what one board designates one year, a future board can undesignate. But what a donor restricts, a future board cannot unrestrict. And we'll see funds that have been held for a long time, like an estate gift. We have to go into the court system to get those funds released. And the court steps into the shoes of the donor, or what would have been a reasonable donor at the time. Okay? So take a look at that. Deb, for a lot of small to mid-sized organizations, funds that are sitting in here might not have been intended to be there. And with a little work, we can usually get them out of here, over to here, or maybe even into unrestricted. We just have to go back into the files and see what's there.
Yep.
You agree with that statement? Yes.
I do. We've spent a certain amount of time encouraging everybody to have a board reserve fund in case precisely of crises like this. And
yeah,
if that's set aside by the board, that is not actually restricted. That is a board decision.
It's
and
a
the board
decision.
can vote to take it out.
Operating reserves is a designation. A special purpose fund is a designation. A building fund is a designation. Replace the HVA system is a sinking fund is a designation. Yeah. Okay. Quick comment on expenses. Okay. We have to do something different than for-profits. We have to break our expense categories into programs, fundraising, G&A for C3s. Non-C3s is programs at G&A. Watching overhead is really important. This is mirrored on the 990, and it's also mirrored on audits, and we'll see this next week. I'm going to just skip over this unless someone has a question. I do want to talk about budgets here. We've been talking about them. We did this in the first webinar on the rolling budgets. I just want people to know there's different types of budgets. We all think about the annual operating budget, okay? And we'll be talking about this in multiple webinars. There's a capital budget. That's a budget for items that go through the operating budget. That's mainly fixed assets. If you have a building, that would be for major investment and renovations into the building and replacements like a roof, elevator system, ventilation system, and such. Cash flow budgets are totally different. That's to project where cash is going in and out of the organization. That won't mirror the operating budget. And we know the big thing that throws a wrench in this is grants, because we have to record a grant when it's rewarded, and we might not see the actual cash for a long time. Okay. And then we can have special purpose budgets. And Deb, I really want people to look at these. I think this is really important, because oftentimes before we can do a joint project with another organization, we put together a project budget. It'll be different from your fiscal year, and you really want to make sure that that budget makes sense. Oftentimes when we're applying for a grant, we need to put together a separate budget for that grant, for that funder, and that might be in a different order than what you're used to. So there can be a lot of different other types of budgets, okay? Real quick, a budget is your operating plan for the next year in terms of dollars, okay? It covers 12 months. And remember, we can have special purpose and individual budgets within inside that. There's some exceptions. It can also be an exception for the first year and last year, the organization might not be 12 months or change of accounting period. Okay, the budgets almost always mirror our fiscal year for obvious reasons, okay? And a part of a budget preparation cycle is, you prepare a budget once a year, you get it approved by a board, you start the fiscal year, you monitor your progress against the budget monthly, and we do rolling forecasts is what we did in webinar number 1, remember? And in mid-year, you take that mid-year forecast, and that's usually the best time to start preparing next year's budget. You start the process over again, and that's the big cycle. The chart of accounts is where the budgets come out of. And Deb, do you think it's okay? I think we have enough time. I'd like to walk people through a chart of accounts real quick. I think it will help.
Yeah, I think that's great. We do
Okay.
have
And I
20,
added this
so
since I
let's
last
do it.
talked to you, but I think it's a help. Just a reminder that chart of accounts is made up of natural line items, projects, cost centers, departments, and then G&A. So everybody take a look at your screen. Here's a simple chart of accounts. It's not complete. Notice you'll see revenue and grant funds at the top and expenses in the middle and the bottom. And usually the ratio is like 1/3 to 2/3. You usually have a lot more expense categories than revenue categories. Okay. I'm going to flip the page. Tell me what changed. Somebody other than Deb talk. Ready? Okay. I'm now on page 2. What did I add? Page 1, page 2. What did I add? What side is the same? What is it different? Any comments here, Deb? Can you see?
Mary said projects.
Yeah, we added the project cost centers departments. This is what makes nonprofit accounting unique. It's really basic cost accounting. Think of pages in a chapter, chapters in a book. That we're going to have a section that we're going to be doing fundraising. We're going to have a section of our organizations doing education. We have a big annual meeting. We have a section running grants. We have a section running our other children's programs or whatever, and then overhead. Okay? Okay, now I'm going to flip the page one more time. Everybody watch carefully and look at the top of the page. In this third example, what did I add this time? Deb, anybody see what did I add?
Let's see if we get any comments. And people, feel free to talk too.
Yeah, just pull off your mic. Yeah. What do you think I added? And you can move.
Oh, this is Jennifer. Can you hear me?
Yes,
Yep.
please.
It looks like under that project thing, you added more descriptions to it, like sub things about breaking out like what your events might be.
Yeah, excellent. Do you see how under special events, we do fundraising, general fundraising, we do special events, and then we broke the special events into 2 sub-departments. So Jennifer, how does that feel to you? Does that make sense?
Yeah, it's when I do our accounting, that's how I think of it.
Yeah. And would a 10K race in the spring look a lot different than a fall gala in the fall? Obviously, right?
Right.
And do they happen at 2 different times of the year? Yes, right?
Correct.
And will the budgets be really different? One could be really big and one could be really small, right?
Right.
And wouldn't it help you as an executive director, CEO to manage these and see how they're doing if they're separated and not dumped together, right?
Right. Especially since special events take a lot of time, staff time.
Right. Yeah. And you have to make it, could you argue to keep the 10K race if it lost money? Let's say you're the executive director. Give me a powerful argument to keep the 10K race even though it loses money.
It may be just a good marketing tool to, highlight what your organization does on it to get your name out there.
It might be great for your brand, right? People connect to it. It gets a lot of involvement. We get a sponsors, and you get a lot of media coverage or whatever, so it's not always just based on the bottom line, right? And we see that with a lot of galas, they raise $500,000 and at the end they have 50,000 left over. They could have just gone to one donor and got the 50K maybe. But there's a lot of enthusiasm and energy that comes out of that. People look forward to it. And those people are giving in other ways. So you can see that. But Jennifer, can you see the pages in a chapter, chapters in a book, right? That we have a chapter in development, okay, and then we have a special events, and then we have a page, these will sit under it. And you see the numbering system and how it works, okay? And it just enables us to manage. Now, can everybody see that this statement can equal thousands of account numbers? That every expense count could be in every department, something like postage. So if you had postage for the fall gala, the coding would be 152-6600, or it could be 6600-152. But you see, it's just how the general ledger systems and the coding works. Now, Deb, help me out on this. We talked about this early on. We have multiple entities, a lot of nonprofits. We'll have a C4 and a C3 together, okay? So let's say the C4 is entity 01, and the C3 is entity O2, okay?
Mhm.
And let's pretend the two entities together, they have one fall gala, right? Which entity do you think you're going to put the fall gala in? In your advocacy group or in your publicly supported charity group?
I'm probably going to do it,
In the public support group. Yeah.
because I want all those individual donations.
Right. So you would have up here, it said O1 advocacy group, O2 public charity, right? And then the coding for the posted for the fall gala would be O2-152-6600. You see how it goes? So you can actually run multiple entities, and you see that as fiscal agency, even though you have one set of chart of accounts. And that's how it's usually set up. Jennifer, I don't know if yours is, are you a multi-entity organization?
No, I mean, this year we were supposed to form a C4, but that's been put on hold right now.
Okay. Okay. Yeah, we should talk about that. Okay. Okay. So I'm going to move on. Any questions here about that? And you can see how this can represent a lot, but you can start to see what an organization looks like here. And this ties into the budget because we're going to have a budget by each department and sub-department. Okay. So budgets, I like to decentralize budgets, not just have one or two people preparing them. Okay. But also so that gets all the staff involved, but then at the approval process, we go through finance committees and boards and how they get involved. Okay. And then here's just a quick example of what we just saw, the chart of accounts, because you can see the annual budget here in this program. Is this a little too small? I hope everybody can read it, but I just wanted to get something up here. Okay. And then you'll see that they have three main program areas, and that totals up into programs. And then you can see they have fundraising and G&A. Okay. Any questions related to this budget? I just want to put one up there. That's a functional allocation. That's the annual budget functionally allocated among programs. Any questions there? Okay. So let's go on. Just a few more sections before we finish up. I'm going to go through these last ones a little bit quick. Form 990, very important. Talk for hours on it, but just want to go over some of the basics. It's an annual filing. It's due 4.5 months after year end. So if you have a December 31st year end, it's due May 15th. If you have a June 30 year end, it's due November 15th. And you can now get with a single extension form as an automatic 6-month extension. You just have to file it. You don't need approval of it. Okay. There's 5 different types of 990s, but 3 main ones. Everybody okay with this cascade? 990 ends are for groups under 50,000. That's an electronic postcard. Okay. 990 EZs are groups that have revenues over 50 but under 200, and then the full 990 is for groups of 200,000 and greater. Okay, the reason you should be aware of these is because you might be partner with some small groups and you want to make sure they have their exempt status. The problem with this one, the 990N, because it's only electronic postcard, no extensions, no nothing, you can't file it in paper, and the IRS gives you no notice of when it's due, that organizations miss this. You see this with a lot of shoebox entities like PTAs. If you go 3 years in a row, automatic revocation, you're out the door. You lose your tax exempt status. I don't like the 990 EZ because it's not so easy. It's 4 pages long. Most of the schedules have to be prepared. Okay. And it's hard to tell your story under the 990 EZ. But Deb, I don't know, you've heard me probably say this before. What I don't like about the 990 EZ is people want to treat you like cash basis, like a child. If you tell them you file the 990 EZ, they want to pat you on top of the head and say, nice little organization.
Right.
I really like the optics of the full 990. It says it, the depth and breadth, and you can tell your story better here. People think that you're going to save money in tax preparation fees by going here, and it won't affect that. And I like this. And most groups that are filing these, they expect to be larger in the future and will file the full 990. Okay. Just to be aware, there's 2 other 990s out there that you'll hear a lot about. The 990T is when you have unrelated business income tax, UBIT activity. These are certain things that you can do. You won't hurt your tax exempt status, but you might have to pay some tax on that. And it's not related. And these are some examples: advertising, sale, some mailing lists, and maybe even some rents on rental property, but we'll go into that in detail. There's ways to get out of some of these, and it's okay. The funny thing I always like to say on these, Deb, people get horrified. If you're paying taxes, that's good. And the reason why, you don't pay taxes on things that you lose money on. So it means that you made money on it. Now, obviously, you don't want to pay more tax than you need to. And if it would be an exempt status entity transaction, you want to do it. But if you can, do it and it doesn't hurt you and you're making money, it's just another cost of doing that bit of business. Okay. And yes.
It is important, thinking back to our discussion about public support, to check whether the group that you're getting your money from is filing a regular 990 or a 990 PF.
Okay. And the 990 PF is for groups that aren't publicly supported. This form looks nothing like the regular 990. And there's a lot of rules because there's a lot of very specific tests in there. Okay. A couple more sections here. Fiscal and financial policies. I want to make a statement. I don't like to over policies an organization, but in certain important areas, if you do not have policies, you end up in what I call in the realm of public opinion. Because policies are there to set certain rules and regs, like a cash management policy, investment policy. And if you don't have that, everybody has their own opinion of how much cash you should have on hand, how you should invest your funds, just using one example. Okay, so these policies are good. They're also what I call a legacy issue, that you can do something really good for future staff, future board members, to get some of these policies cleaned up and in place so they're not fighting why this is this or that 5-10 years from now. Okay. And Deb, you and I have both known, we've gone inside and see the organizations, well-meaning organizations and all that. Say, oh, we don't need this. We're all ethical people. We're okay. But it looks like a messy house to me if you don't have it. And it will cause problems eventually.
Right.
The policies you see listed here are some of the key policies that the 990 refers to. And I don't like the optics of checking no on the 990. Okay. So you want to have a code of ethics. Conflict of interest policy, extremely important. There's a lot of questions on the 990 related to that. Whistleblower, document retention, instruction policy. You can't get through audits without these. There's a question on compensation, even though nobody's overcompensated, that you have a set way of going ahead and setting the senior management compensation, and the board is overseeing that process. Again, you don't want to check no on that box on the 990. You know what I mean? Operating reserve policy, we're going to talk about next week. Investment and cash management, we'll look at all these next week. But I just want to put that up there. I want to talk a little bit about reporting using outside accountants. Most of us are there under the audit process. Okay, these reportings, you need a letter from the firm when these come out. Of course, you get the audit letter if you get a review or a compilation. Going backwards, what are these? A compilation is taking your financial information, putting it into a GAAP format, but they're checking nothing. I don't like paying for these, and the letter sounds bad. Okay, it says you can't rely on the numbers, they're just getting in the right format. A review is more than a compilation, but less than an audit. And a review is they're putting the information in the right format, and they're doing some analysis testing, comparing the budgets and things, limited amount, not really, but they're relying on analytical procedures, but not doing what under an audit we call testing. And an audit is the highest level service and why it costs the most, and it's third-party verification of the dollars that you have in your financial report. Most grant giving organizations require that. It's a good best business practice, good part of the internal control system. Again, like any internal control, the cost benefit might not be there. If you have a $50,000 all volunteer run organization, probably not getting audits. It's just, you can't line it up. So, other services you can buy from an accounting firm, public out, you can get consulting, which would be at the CFO level, like I do. You can get accounting services like controller level services, help you close your books and get your reports out. You can get day-to-day bookkeeping services, and then tax services are separate. If they're doing audits and reviews, in order to be independent, they can't be doing these top here. They can do the tax because they have to be independent to do the tax. Okay. Audit reports are, just want to go through it quickly. You get 3 reports. You get the opinion report that comes out. You get a report on internal controls, and then you get the required communications letter. When these things come out, the financial statements are yours. I first go to the opinion report. We want to see everything present fairly. It's what we call a clean opinion. I then go down here and look at the SAS 114 report, see if there's been any material journal entries. And then I go and look at their comments on the internal control system and if they have any findings. Okay. Just want to talk about governance. I think this is pretty there. I think your organizations tend to have pretty good governance structures. Okay. Just remember, state law comes into play here. Most states require a board chair and a secretary. They don't require a treasurer. They need somebody they can who they can attach to as a secretary to serve for public documents. But and some states do require, but filling out those top 4 officers, you usually have a board chair, a secretary, a vice president, and a treasurer. You can have a past president, you can have an incoming president, you can have multiple vice presidents, just one treasurer. And then you have other people sit on the board, they're board members, but they're not officers. Okay, they're just directors. Okay, and then these are the four committees that overlap through the finance area. I think of these, to me, the most important is the finance committee. That's running all the time. Not all organizations have investments or need an investment committee. Not all organizations are getting an audit. And some organizations, even though they're getting an audit, they might set the work of the audit committee inside the finance committee. But we always see a finance committee, I believe, and almost always we see an executive committee, which is a smaller group of officers that's managing the organization in between regular board meetings. So that's my 4 blocks right there. Everybody good? Okay. So we just have a few minutes left, Deb. I wanted to see if there's any questions. I want to let people know that we're going to be really taking a hard look at the financial statement and the balance sheet next time and really dive into it. Talk about operating reserves, talk about financial strength and weakness like we've been talking about where we might have exposure during this unprecedented crazy time. We can't predict where we're going. Okay. But I think everything we're building through this webinar series helps us during this time of, uncertainty that we have, to protecting our financial position is most important. We're just about 2:30 by my clock. Any questions?
If people have questions after the webinar, when you've gone back and thought about it, feel free to email Polani and we'll get them answered for you. And I want to remind you again that you can do one-on-one consulting with Mike, and Polani will coordinate that. We really, really want to help you be as strong on this as you can be. I'm checking to see if anybody's got questions that you're putting in the chat box, and I'm not seeing any. Wait, and Polani's put her email in there so you know how to reach her.
Good.
I know it's a crazy time. I know it's hard, with 5 million things coming at you sometimes to make time for the consulting, but I'm usually really optimistic. I am pessimistic about this recession. I think we're in for a long, hard haul, and I want to put you guys in the best possible financial position we can. And so I do encourage you to take advantage of meeting with Mike. Jennifer says, thank you. The explanation of restricted, unrestricted, temporary, and permanent was especially helpful.
Deb, could you tell people that these sessions, if they'd like to do them, they are confidential, because we know people want to share some struggles, and we do that as done confidential. Yeah.
That is a really good point, and Polani will send out another general reminder to the whole network, and we will emphasize that it is confidential. You're welcome to share the information with me, but you do not have to, and nothing goes beyond us to any of your funders.
And so when I report back to Deb, I just report back that we met, we had a successful meeting, and just talk in general terms, but not in specifics,
We might talk about an issue that somebody raised that we want to provide more TA around, but we would never talk about an organization's financial situation. I think that's it. I think we look forward to seeing you all in a week. We will be sending out the registration for that next webinar that is on the screen right now. Today, we will talk to you then. In the meantime, stay safe, stay healthy, and let us let Palani know if you've got questions and we will coordinate it for you.
Okay. Thank
Have
you
a
very
great day,
much.
everyone.
Thank you. Bye.
Bye.